Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Daryl Thomas, and today we have the pleasure of interviewing David Morgan of the Morgan Report, also known as the Silver Guru. How you doing today, David?
Daryl, I'm doing well. Thank you for having me.
Yes, that's good to hear. So I want to start with just kind of your broad macro outlook. A lot of things going on right now. Many people didn't have, the current conflict on their bingo cards or whatnot. Strait of Hormuz is still technically closed and such. And so just curious in how you're thinking about markets and the global kind of macro, situation right now.
Well, I would say maximum uncertainty. Markets really dislike uncertainty. And, this thing with what's going on with Iran and, of course, the Russia-Ukraine situation is, kind of in a distant background, but it still continues. So the main problem with the Iran situation is oil, and oil means energy, and energy means life. And so with the decrease in energy, it cuts everywhere. It cuts into fertilizer for food production. It cuts into transportation and anything to do with, travel, etc. So it's huge. It's really, really big. And I don't think the oil market has really gotten to a level that is accounting for the disruption that's already taken place, let alone what could be in the future. So in my view, oil is still undervalued or underpriced. And the metals have reacted differently than most people expect. They expect with this kind of uncertainty in the market that the metals would go up, and they haven't. They've stagnated and really are in a pretty broad trading range, all metals, gold, silver, platinum, and palladium. And I called that. I made that call. I thought that, these markets often do what they don't expect, and they anticipate the future. So we got a huge run-up in silver in January 2026. I put out information for my members to, look at taking profits, in the above 80, actually, 80 and into the 100 range. Some did. I'm not sure that's the total top. But Bloomberg did an article from one of their technical analysts, well respected, and he basically put out a paper saying that he thought silver was perhaps done, that the run it had in January 2026 was over. He made an analogy to the 2016 move and other parabolic moves where it got to that high, it fell off sharply, and then it went sideways for a very long time, like years. And he made that argument. I'm not, first of all, the analogy he made is valid. Secondly, does that mean that it's going to happen again? And the answer is we do not know. I suspect the metals bull market is not over. I do see higher prices in both the metals going forward. But unlike some of my peer group, I think it's going to take longer than many of them are indicating. And even some of the banks are indicating, $100 silver by the end of this year. Is that possible? Of course it is. But from my perspective, sitting here right now, subject to change, something could happen and disrupt, silver supply, or maybe a big new technology needing silver or whatever. But barring that, I see further movement going in a trading range. And I don't really think we're going to come out of that until probably the end of this summer. And at that point, we could still be between 75 and 85, for example, which is a good price. I mean, if your average price is in the 20s and it's at 80, you got 400%. So I'm not complaining about that price. What I'm suggesting is that we're in a wear you out phase, I think, of both the metals right now.
Yeah. Okay. Yeah, that's good. Good to hear. Good to know. Curious in your thoughts on. Earlier, you mentioned the price of energy, oil still being underpriced, considering the disruptions going on with the strait and such. How do you think that's going to impact the miners? Because they've had, like, over the last couple of years with the run up in the prices of the metals, energy was a lot cheaper over the last couple of years, and then now crude oil is up higher and such, and then if it goes even higher because of some delayed effects or whatever the case may be, I'm wondering how that's going to impact the miners. And so, just curious in your thoughts there.
It has a direct effect. Depends, of course, on a case by case basis. But if you look at some of the mining, larger mining concerns, truly mining, producing, ore, the cost of the energy input cost could be like 25%. So that's a huge input cost. And if that goes up, then obviously it goes from, 25% to 30, 35, 40, whatever. So it's huge. So it can have a very big impact. So there's two ways to mitigate that. One is to have oil in your portfolio, which we have done recently. We did it a few months back before the Iran situation. I saw oil as being the most undervalued asset in terms of silver and gold that we had on the board. And so I made reference to that and suggested taking some positions in oil companies. So that's been accomplished. And I continue to advocate that. The other part is the bulk of our top tier cash rich unhedged companies are primarily streamers or royalty companies. And they have a different dynamic. So the oil price really doesn't affect those situations nearly as much as it affects a direct miner. So that mitigates the issue substantially. We wrote a white paper in the Morgan Report. I'll just call it an editorial. We did an editorial about it a couple of times. It might be time to do a third one, just reminding people of the structure of being a financing company with different mines and having a royalty stream or a stream versus being a straight out mining concern. So there's two ways. Again, one, you can be into a stream or royalty situation, which we favored from the start of the Morgan Report. And then, of course, having an oil position that will mitigate. So if oil prices go higher, you're making money on your oil stocks and your miners may not be getting the lift that they might otherwise. But lastly, all stocks generally trade on earnings. And if the input costs are greater, but the earnings are greater than they've been in the previous quarter, which many of these companies will see in the future, then you'll get a lift in the stock.
Okay. Got it. Yeah, and that sounds like a great strategy. I mean, for me, I've been in the royalty and streamers for a while. The audience knows this. I bring it up pretty often. And, having exposure to like energy, definitely, I think could pay off because they were undervalued before going into this conflict, and this conflict just exacerbated the issue for sure. So I'm curious on your thoughts on this. So you mentioned that obviously the metals haven't responded very positively since the conflict. Leading up to the conflict, they did, and then they've kind of pulled back. I'm kind of thinking about this here. So I'm looking at the Fed's balance sheet. So obviously they started tapering in 2022 and such and selling assets off the balance sheet. And then back in December, they started pivoting from quantitative tightening and selling assets off their balance sheet to starting to increase their balance sheet again. So you see the Fed's balance sheet is increasing and such. And we know that, currently there's, negotiations, and there's a lot of noise around the negotiations in terms of, coming to some type of resolution and such. But typically any type of war spending or, the increase in the military budget, typically, money printers come out and fund that. And we would think like that would actually, boost gold and silver prices. And so just curious in your thoughts on the Fed increasing their balance sheet, and what do you think that's going to do for the metals in the future?
Well, I think in the longer term, it obviously will take the prices of metals higher. But there's this ebb and flow, back and forth, risk on, risk off, different opportunities. AI has gotten quite a run, as we both know. And general public, the general investing audience really is not savvy enough to understand, monetary policy, fiscal policy, government spending, and what it really means. And because of that lack of knowledge, I'd say that there's not as much interest in the metals as there could be or should be. But on balance, over time, you keep pumping up the money supply, the metals will rise based on that and other factors. Right now, I think there's so much distraction because of the Iran situation and other factors. I mean, a lot of AI concerns regarding, how many jobs will be lost due to AI, how safe is it, what concerns do we have with losing the AI race, and then, of course, the political class being almost in total disarray. It seems as though from where I sit, and I'll make it about my perspective, but I've talked to others that we don't know who's who in the zoo. You hear one thing one day, something contradictory the next day, something even contradicting that the third day, and there's no real rhyme or reason or any well-known strategy or output from the political class as to a resolution to the conflict or conflicts. We bring in Ukraine and others, and what that means for the future, and especially with concerns regarding a substantial decrease, measurable decrease in the food supply.
Yeah, for sure. So earlier you mentioned telling your audience, hey, take some off the table, and which there's nothing wrong with taking something off the table, especially when things get overheated in these markets. So typically when you give or when you typically follow that type of direction, or that's your outlook on the metals as far as like taking profits, are you typically talking about like the stocks themselves, the physical metal? I mean, obviously each individual investor or subscriber to your newsletter, they're going to do whatever they choose, right? But just kind of curious in your view on the equities versus the physical metal.
Yeah, I got asked that a couple times, and I probably could have done a better job. 2020 hindsight is perfect. 2020 foresight is not. I was asked that question going into the sell-off, or what I suggested, So I basically made 2 PDF files, which, the members could print out to have right in front of them. They don't need to have them printed out, but, I suggested they might, because it's just, right there, 1 or 2 pages. And selling in tranches all the way through the peak, which, as I said, some did. And many asked, should I do the equities or not? And I suggested not doing it. Looking back, and I did say it's your choice. Looking back, it was probably worth selling the equities because there was less slippage. You didn't have these big spreads that you had in the physical market, and there was enough of a pullback where you could have, reloaded at a lower price and, scraped off some pretty good profits. I did have one of my members that I'm pretty close to. He consults pretty regularly. He sold his equities. He sold out almost everything, pretty much at the exact peak. And then remember that day we got where silver hit like $65 the ounce, like after the collapse, and he got back in. So I think it was like a 3 or 4 day period. He was out very near the tippy top and back in very near the low. Not everyone did that. I didn't put out an alert. I didn't say, hey, buy at 65. I was watching the market. I'm a little conservative. I didn't know if the 65 was going to be a bottom or not. I mean, I suspected it could be, but I didn't know. So, yeah, it's always easier to look back. I mean, I don't mind admitting, but, many people, I would say many, but some of my, membership and people that follow me that aren't, paid members, value my opinion. It's not perfect, but some are equities only. In other words, there's some that, for reasons that are important to them. They live in an apartment, or they don't want to handle the physical metal, or they're afraid to keep it in their house or whatever, and only have maybe an ETF. And that still gives them price exposure. Let's be honest. It's not the real metal. We all know that. It's not what I teach, but it's better than not having any exposure. to the metals. And so, they could sell out of an ETF very easily, a little slippage, a lower capital gains tax, et cetera. So there were some of those as well. So, I can be somewhat happy that I, had the foresight ahead of time to scale out into strength. On the other hand, if I had to do it over again, I would have said, either or both. You could do the real metal, the equities, both of them, one of them, your choice. And I was always asking or suggesting, I should say, partial profits. The last thing you want to do in a true hyperinflation, which we haven't seen yet, I add the word yet, it's possible, is to sell out for fiat before a total currency collapse. I do not think that will happen. I really, really doubt it. I think the chances of the dollar being worthless is almost impossible. But that doesn't mean that we couldn't get in that trend that's the dollar is diving so quickly. In other words, it's losing purchasing power so rapidly that people project that it's going to zero. And the market acts accordingly. And that's a time to definitely start looking at, what to move if the metals get overvalued, what to move those profits into. Will it be oil again? Will it still be undervalued relative to the metals? Will it be real estate? Will it be the stock market? I don't know what this is.
We got all of the boxes ticked, and now we have one of the only shovel-ready permitted projects in the US.
It'll be Wyoming's first permitted mine. Is this correct?
It'll be the first one in 100 years. US Gold Corp is a near-term, low-cost gold producer in Wyoming. To learn more, go to usgoldcorp.com.
Even within that advice, or that suggestion that you gave your audience, I think that each individual's investors' psychology and temperament, and some people are like in it for the long haul. Like I had a lady, I think she went and bought silver at $115 at my local coin dealer, and she was convinced like it's going to go higher. Over the weekend, we had the crash down, and then my coin dealer said she had gave him a check, and so he had to call her the next week and say, hey, sorry, I don't know if you knew, but the metals prices crashed and such, and he had to pretty much cash the check, and so but she just didn't seem fazed by it. She seemed like, oh, well, she felt like, it's going to go higher, and that was her conviction. Right. And so even though like it was an opportunity to like take some profits off the table, and more seasoned investors who can kind of like, look at markets, tell when markets are overheated, take some profits, buy when the sentiment's more lower or whatnot, they're able to do that. But you do have some of the people that are just like, hey, I just know that this is going to be higher measured in dollars in the future.
Well, I think she's correct, but time will tell on that. I just had the $100 silver party in Las Vegas. I'd promised my membership that if we hit $100 silver, I would throw a party, and I did. And it was interesting because I had to put all the logistics together before silver got to 100. So I had to anticipate that it would. And if it didn't, and it hit, let's say 85 as an example, I was just going to have the party anyway, because there's a lot of moving parts to put together something like that. Anyway, it did. It went over 100, as you know. But I'm coming back to your question, and one of the guys bought a boat, and I'm not talking like a fishing boat. I'm talking a boat.
Wow.
And he showed me a picture of it, and that's what he did. And that was, one of his dreams, or maybe the big dream for him. And I was just very happy for him, because obviously a lot of silver investors that have, are, long in the tooth. I mean, some bought, for the last 20 years, some bought in the last year. But many are 5 or 10 years into this market, patiently waiting for silver to make a move, and it finally did, substantial move. And why not cash out? I mean, that's the reason, everybody's got a different reason, for, one's wealth protection. That's generally everybody. But, people have dreams of houses, boats, college educations, charity, whatever. So there's a lot of reasons to protect your wealth and then have options once you have your wealth intact, what to do with it.
Yeah, for sure. So, do you think we'll see triple digits again?
I do.
You do?
Yeah.
Where do you see us? Do you think we beat the all-time highs that we've reached, or kind of, and why do you think that is?
Yeah, well, again, some of the banks are looking at, triple digit silver, some by the end of this year, which could be. I don't know yet. I think the reason that I feel that it will go higher still is this. Normally in a huge bull market, be it stocks or real estate, whatever the market is, the retail investor, the average person on the street, is talking up that market. So, real estate investors, maybe, for example, my mother-in-law, we've had two or three really good real estate booms in my lifetime. There was one here in northern Idaho, and, that was lots of people, primarily from California, but other states moving into the area, and they're just bidding up prices higher and higher and higher. And she was convinced, you can't lose, just like the lady buying the silver you just talked about, and brought me over to see a condominium. And this thing was just so overpriced. I couldn't believe it, but she was convinced that, all you could do is make money. That to me was kind of the top of the market. So, man, it was. And I'm making a point, not that I call every top perfectly. The point I'm making is that the shoe shine boy giving stock tips, which is well-known metaphor from the 1929 crash, whether that's true or not, it makes a great story and it illustrates it perfectly. When you're getting your neighbors talking gold and silver, or somebody that hated that sector and all of a sudden is really enthused about it, that's a top. And we didn't see that. What we saw was a lot of retail that was stale, had held it for years, never thought we'd get above 50 again. It hit 50, and there were a lot of sales at 50. People were, that's it, it's never going higher. Every time it goes to 50, the banks clobber it down. I'm not going to get the analogy of, Lucy taking a football away from Charlie Brown when he goes to kick the football, or Linus, whoever it is. She's holding the football to punt or kick, and then as soon as he gets there, she pulls the football up. They weren't going to let that happen again. So a lot of sales, and then a lot of sales into the move up to 100. So I think, as I've said earlier, we're going to have to wait and see how this really flushes out. But I don't think it's over. I think that we've got to see those people, your neighbors, people that never talk gold and silver, coming to the fore and saying, silver is indispensable, essential, irreplaceable, unobtainium, and the price is going to $1,000. We start hearing that again, probably in a place where you want to start looking at, taking some profits.
Yeah. There was a lot of selling. Like I remember, just sometimes I just love to go to like my local coin dealer just to kind of just see what are people doing, and just sometimes I'm in there just chatting with the fellas and okay, what are people coming in? What are they doing? What are they looking at? What are they selling? And there were people that were coming in like that had either like some silver jewelry or some coins from a long time ago, and they saw the silver price was high and they were coming in and selling. And then obviously we had the issue with the backlog of the refineries and such. And so that also restricted, didn't restrict people, but some people didn't want to take the discount that they had to sell it for and such because of that issue. And so, so that was pretty interesting. I'm curious in like so obviously the longer term view, silver's going higher and such. And earlier you mentioned like currency collapse. So some people stack their wealth into gold and silver because they're like, okay, this is my insurance. The dollar at some point is going to go to zero. I'm curious if you see are you watching anything particularly with this petrodollar situation, with the Middle East conflict and related to currency collapse or monetary order regime change or anything of that nature?
Yeah, I've looked at it and studied it and written about it and spoken about it quite a bit. My whole speech at the 50th anniversary of the New Orleans Gold Conference was about the new monetary system. And I took almost every bullet point I spoke to off of the BIS's website, the Bank of International Settlements, known as the Bankers Bank. And so, to me, the fact of the dollar going to zero is nearly impossible, because before that will take place, there'll be a new monetary system installed, and that's already been accomplished in China. China already has a new monetary system. They're basically a digital-only system with everything done between Tencent, WeChat, and another clearinghouse through their banking system. And it's ubiquitous. It's across the entire country. Very little cash, no cash basically in the cities, and probably in the rural a little bit. So that's the basis for the global system. And it's being implemented more and more all the time. So you're going to get to the point where you need to have a real ID. The real ID is put on your bank account, and from that point forward, you're in we're in a digital payment system primarily. Yes, cash exists, but the amount of cash transactions is minuscule relative to all transactions. And it's a way to fight back, by the way, to keep your anonymity and to keep privacy and to keep freedom, is to use cash. And so I would recommend anybody that's bent on keeping your privacy and your freedoms use cash. But having said that, the step into the new system is fairly clear, and how it will be implemented and when it will be implemented remains to be determined. Most of the banking elite are globalists. They don't have any particular association with any ideology of any given nation state, nothing to do with what the principles of the founding country might be. It has all to do with, profit and loss, loans, usury, and everything that has to do with the banking system. And that's ubiquitous worldwide. It's interesting that some of the countries that are not in what I would call the Rothschild system would be Iran, and North Korea, and Cuba. And those are the only three that I'm aware of that are not locked into the current global banking elites system. And of course, there's pushback with the BRICS. I understand that. But I also understand the bigger picture. And the clearinghouse is based on ISO 222. You can look it up, ISO 20022. And all clearing, regardless of what crypto you're using, what currency you're using, what platform you're using, clears through that. So to me, the BRICS pushback is worth mentioning and certainly can have some viability. But at the end of the day, if it all clears through the way the bankers want it to clear, where they have control of it, in the long run, I don't think it makes a lot of difference. Now, I'm sure others may have a different view, and I'm certainly willing to listen to the arguments. And I've listened to some. I'm not convinced.
Mm-hmm. Yeah. You mentioned some concerning points about, kind of like a surveillance state, with the digital ID. I know like some of the current FISA 702 bill, that's problematic with foreign intelligence or with it being able to gather data of foreigners, but U.S. citizens actually getting caught up into that data, and that that law being abused and not used with integrity. And so there's fight in the Senate about it needs to be protected through the amendments, like, where you don't have the right to search or seize without a warrant and such. And so, that seems like a big issue, well, it is a big issue. It doesn't seem like it. And so I'm curious in how you're viewing the metals within that particular framework of we're headed, more towards a surveillance state. Currency is declining and, going to collapse at some point or whatnot. And so just curious in your thoughts there.
Some time ago, it was last year, And I wrote an article, I think it was called Freedom Dies When Money Lies. But it had to do with your question, Daryl. And that is, is there a correlation between honest money or sound money and freedom? And the answer is yes, there is. And I suggest you look it up. I could send it to you probably after the interview if you want to post it.
Yeah.
But it's very general about how tied together they are. I mean, when you think about, I'm going to digress a moment. One of my predecessors, Jerome Smith, wrote a lot about primarily silver, but precious metals, Constitution, freedom, currencies. And one of his smaller, less known publications was on a monetary system, and he called it the ownership value of money. I don't say value, ownership theory of money. In other words, you don't really have money if the bank has control of it. So as most of your viewers would know, if you have a deposit in the bank, it's the bank's money, not yours. Once you deposit it, you're an unsecured creditor of the bank. So if something goes wrong, the bank actually has access to your funds legally, and they can give you a receipt to be a stockholder in the bank if the bank failed. So just to reiterate that harsh reality, but the ownership theory of money means that you have gold and silver coins, basically. There's other things you could have. It's not unique to gold and silver, although to my thinking, being more of a conservative type thinker with, physical reality versus a digital platform. But you could have currency in a crypto form. That would be second choice for me, but certainly more convenient. Anyway, the point being, if you don't own it, you don't touch it, you really don't have money. You have a representation of money. And I could go on from there. I've got to reread the book, actually. But I think it's a very interesting kind of a gut level look at, wait a minute, you mean I really don't own what I think I own? I really don't have in a safe location like a bank, my life savings or my savings account? Something to ponder.
Yeah, for sure. And that comes back to, the importance of liberty and property. And money being property, and such, and also being a something that should be a human right. And so I'm thinking about obviously you have some folks that are in this space to make a buck, which that's fine. And then you have some folks that are in it because they view, metals as okay, this is property. This is my insurance. This is my sovereignty. This is my financial independence. And some people have a view of both or whatnot. What do you think as far as allocation goes, for you personally? So obviously, if you're taking profits off the table, you're okay, I'm fine selling some of these physical metals. But what do you view as far as how much people should keep, as far as in terms of maintaining their sovereignty, financial independence, and insurance against currency collapse and all the other things?
Yeah, I think there's two questions in there, so I'm going to divide them out the way I heard your question. Yep. First is, how much, of your portfolio should you have in the precious metals? The answer is 10% for most people. And then in the 10%, how much should be in physical and how much should be in equities? And that's a personal choice. Some people think all, physical. Most don't think all equities, although some might. But it's a balance, and that depends on your age, your risk tolerance, and what you want to accomplish. So basically 10% is enough. Now, the end of your question was, how much will you have kind of to the bitter end if there is a true currency collapse? And that, again, would be, would be different for everybody. But I would say rather than a percentage of your portfolio, it would be more like living expenses for you personally. So I would never sell. I would keep as an absolute minimum 6 months living expenses at my living expense rate. So if my living expenses are $3,000 a month, 3 times 6 is $18,000. Bump it up to $20,000. I'd want a minimum of 20,000 in hard metal, not equities, that I would have that I'd never sell out. So in other words, I could have 5 times that much and filter out on the next rally and, pay off bills, start a foundation, give to charity, whatever. But I wouldn't sell it all because of the very unlikely possibility that we do have a true currency collapse, or the banks close, or there's a pause in the stock market, or, we go rather, crazy and go into a Mad Max type of situation where, you do have to barter for a while. I'm not advocating that. I'm not suggesting that will ever happen. What I am suggesting is that you don't want to have your life preserver and then, see calm waters and blue skies and throw the life preserver out. I'm never going to need this thing. You want to keep that until you pass it on to your family.
Mm-hmm.
You still have a life preserver in-house that you may have to use at some point.
Yeah, for sure. How are you viewing the stock market right now? So the S&P and the NASDAQ keep reaching all-time highs in the midst of this conflict. Gold and silver have been stagnant. I know that the S&P measured in gold was rolling over. I have to go look at the chart to see if that's still the case, but I assume not if gold's come down off its highs and the S&P is, rising to new highs and such. And so I'm kind of leery of it because I'm like, okay, this is kind of confusing that the market is continuously rallying and we have, this huge crisis in the Middle East with about a fifth of the world's energy supply and such, and many other downstream impacts from that, fertilizers and such. And I'm like, and the market's rallying to all-time highs. And so I'm curious in your thoughts on the markets.
Yeah, my thoughts on the market changed a few years ago. I've pretty much been, I'm certainly not a perma bear, but, knowing markets pretty well, I'm a student of the markets and have been, most of my adult life. And I saw a distribution pattern, which is typical of the smart money getting out. They don't sell a bunch of stock all at one time because if they do, they're going to drive the price down. So they filter out. They start selling in blocks. And they sell those blocks over a matter of weeks, months, or even years if it's a big position. And, it depends how liquid the particular company. So I saw that distribution and I said, well, we're getting near a peak of the stock market. Then I revised my thinking. I thought, my goodness, if we do go into a near hyperinflationary environment or something close to it, stock markets keep going up. I mean, if you look at, Zimbabwe after the Zim dollar failed, or Argentina, or Turkey, or many of these countries that have, moderate stock markets, but they still have them. What you'll find is in an inflationary environment, the stocks just go higher and higher and higher, and they are better than having your money in the bank. So anyone that's got savings will take it out of the bank and put it in the stock market because it protects their purchasing power somewhat. Most of the time, in almost all cases I've studied, having precious metals is superior to having money in the stock market. But the stock market's better than having it in cash. So I gave that some thought, and I came to the conclusion that we could be, I don't say would be, we could be in that type of a situation. I mean, so many depend upon a high stock market, not only in the United States, but basically globally. Of course, it's more prominent in the U.S. because of the pension fund program and government securities, the debt markets. Everything's focused on how well the economy's doing, which the economy is separate from the stock market, but most people equate them as being the same thing, and they are not. Yeah. But nonetheless, the idea that, the stock market's making new highs, we must be doing good. I guess it's just me that's, feeling the pinch, but, oh man, but hey, at least my 401k is looking good. Or, yeah, I'm not feeling that poor. The S&P just hit it. I moved my savings plan into a index fund for the S&P 500. So on and on it goes. So I've revised my thoughts on it. I think we could get to a point where the market just keeps going higher and higher. But in terms of gold, as you mentioned earlier, thank you for doing that, Daryl, it's actually an invisible crash. It's going down, down, down relative to the gold market. And we saw that in the 70s. Jim Dines, that wrote one of the best financial newsletter, who was really instrumental in me getting into this business, wrote a book called The Invisible Crash. And even though we're seeing higher prices in the Dow, if you measured against gold, it was losing value.
Mm-hmm. Yeah, for sure. So any thoughts on bonds? Obviously, people say this is like the cornerstone of the the U.S. financial market, and such. And what is the bond market communicating? So curious in your thoughts.
Well, I've said several times that the bond market is the keys to the kingdom. I mean, there's nothing more important in the whole financial system than the bond markets. And primarily that means the U.S. dollar system, which is, of course, T-bills, T-notes, and T-bonds. And those debt markets are what keep the whole world economy going. And, of course, purportedly, they're the safest investments you can make is in the U.S. Treasury market, which is a false statement. All fiat has failed. So the idea that these bonds that can have value forever is preposterous. It's impossible. It's never happened. I don't think it'll happen this time, which means it'll have to be revalued at some point. And we're already seeing that. We're seeing, lots of reasons and lots of opportunities to get out of the debt markets. You look at how much money's moved out of the U.S. Treasuries into gold, for example, for central banks. You look at the cryptocurrency market, which is something that's much different than the U.S. Treasury markets. And you see how much transactions on a global basis is done U.S. dollar-wise versus alternatives. And in all cases, you're seeing less and less prestige in the U.S. dollar, cash or otherwise, debts, bonds. And so it's coming down, down, down. And there will probably be a point sometime where those debts are rolled over in one way, shape, or form into a new system. And I've written about that in the Morgan Report. It's pretty obvious from my studies that we see a situation where we have basically the planet is tokenized. And these tokens represent, land, sea, and air. Basically every, square acre that, for example, in the U.S., all the federal land that the federal government owns, so all the land and the lakes and the rivers and the trees and the critters and all the air, name it. And that is an asset. And that asset becomes tokenized. And now we have a bunch of tokens that represent this land mass that's held by the federal government. And all of a sudden the balance sheet changes dramatically. You're not, almost 40 trillion in debt in net deficit for the current accounts, but you've got, make up a number, I don't know, let's call it, I think a number's been put out there, I forget what it is, but 300 trillion in assets. Well, all of a sudden that, 38 trillion current accounts deficit looks pretty small relative to, 300 trillion in all this land, air, pine needles, et cetera, value, which is really all just made up. But, I at the end of these great inflations, the buffoonery that takes place is monumental, as we've seen with the, tulip mania and other manias throughout monetary history. So all I'm suggesting is that there'll be some type of rollover. And I believe that's in their plan. How it unfolds, well, it remains to be determined, but it's pretty clear to me that they want to do a all digital tokenized system. And the one I outlined could be one that they put in place.
Yeah. I keep thinking back to those World Economic Forum ads with back in 2000 when they were like, you eat meat and you'll be happy. You won't eat meat and you'll be happy or something. You you own nothing and be happy. And I was just like, wow, this is and I've been seeing like with the it's kind of interesting with the what do you call it, like the fake meat coming out, like that they're like printing that looks like Play-Doh. Yeah, that's some like weird stuff. It's some it's kind of some weird stuff going on in that realm of things. And so yeah. So you mentioned earlier that you mentioned oil, obviously metals and such. And so I'm curious if liquid cash has a place in the portfolio in your view.
You mean just a cash portion of the portfolio?
Yeah.
Oh, absolutely. Yeah, no, it's always good to have cash. I mean, as much as I beat up on the fiat empire and, why fiat is really robbery because of, the way the system's set up for continuing inflation. So you continue to depreciate the purchasing power. Still important to have it because markets do change in terms of fiat price. And if things are undervalued and you can get a good deal on a stock or a house or the metals or whatever, it's good to have the liquidity. The situation is that regardless of what asset class you favor, in all of them that I could think of, it basically comes back to cash. So if you buy gold, you're buying it for cash. And if you sell gold, you're going to get put back into cash. Yeah. So, yeah, it's important. And right now, I think building cash is probably important. I'm, getting ready to write the next report, and I'll be advocating for my readership to probably build a cash position. Again, some are still up. I'm up. I mean, even at $75 silver and, $4,200 gold or whatever it is, I mean, both that and the equities, they're all favorable to where my average price. Mm-hmm. So I'm still in a profit zone on almost everything. So I'm not like, I could look back a couple months ago, oh my goodness, it was much better, a couple months ago, which is true. But that gives you flexibility.
Yeah, for sure. And also, like when we're up in these portfolios and such, those are like paper gains. And so like if you don't realize any of those gains, they can evaporate too. So, I think it's important to just try to reduce this risk as much as possible and continue to, remain nimble as well, especially with what's currently happening with the Strait and such. So, David, appreciate you coming on the show and everything. Obviously, you're writing some reports at the Morgan Report. If viewers were to go to the Morgan Report, what would they find? What do you think the value is there?
Well, there's value in information. There's lots of sources out there, so you kind of can make up your own mind whether you think time spent with me is valuable to you or not. But if you go to themorganreport.com, step one is get on the free service, which is usually interviews like this that we'll be putting in our mailbox or email box. Step two is to watch 2 documentaries, one Silver Sunrise that I completed at the end of last year. Talks about the power and control that money powers have over us using the money power. And the other one is called Four Horsemen Film, which is about the end of the Age of Empire, which is what's rapidly happening. And a third step is for those that want to get involved behind a paywall, interested in a one-on-one consultation, maybe the basic or the premium service or the mastermind service.
Yeah. Yes, that sounds great. I mean, those documentaries, that sounds great too. So I encourage the audience, encourage you all to go over there to check it out, themorganreport.com. Be sure to hit the subscribe button if you haven't subscribed to the channel yet. Love to have your support here. And David, appreciate you coming on the show. Look forward to our next conversation.
Me too, Daryl. Thank you.